Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. Now there's a couple of things that I want to talk to you guys about, okay? First things first is the triangle pattern. I made a video this morning because I didn't make a video yesterday talking about the triangle pattern. How as long as we're within this triangle pattern, we're going to get a lot of chop. So we want to look out for the breakout or the breakdown, all right? And I mentioned how I had a level around 428.5 based on the daily chart. Okay, so in that video, I mentioned how 428 was the breakout of the triangle pattern, but you have to understand, guys, intraday, as the price moves forward, the breakout level changes and goes lower, all right? By the time SPY did break out, which it was very close to the end of the day, and it broke out around 427.5-ish, and you can see here that it popped up. This purple line was my 428.5 resistance level. Very important we play it level to level like I always talk about, but it hit that level, and that's when it pulled back. Okay, so yes, I mentioned as long as we're in this triangle, we're gonna be in a chop phase, and that is possible we break out. Can we get that next one directional move either to the upside or to the downside? In this case, since it's a breakout, we might get the directional move to the upside. Okay, but that is not guaranteed. All right, always got to let the price action guide us, and you know the levels, know the setup, and just trade it unbiasedly. All right, so even though we got this breakout, there's no guaranteed that tomorrow is gonna continue upwards. Okay, we could still continue chop, or we can get a false breakdown, which brings me to my bearish scenario. 427 is now first support. Okay, below that is 425 that I mentioned you guys many times. So obviously, if we lose 427, that puts 425 in play. And below 425, I would probably swing some puts and target. If we go to the daily chart, you can see my fib level here at 421. That's the 50% retracement level. Possible if 425 is lost, we can go back and target and back test that 50% retracement level. Okay, now you can see this up move that we had since mid-July. So if 427 is lost, that puts 425 in play. If 425 is lost, I would favor a back test of this 421 level, which is the 50% retracement level, okay? Now to me, as long as 421 holds, that's just a healthy back test to set up energy for more upside, because RSI is pretty overbought. However, if 421 is lost, I believe this is a reversal, and that bears are going to be taking over. Okay, so keep in mind, if 421 is lost, possibly this was the top. And if that's true, we don't need to call the top. We don't even need to catch the top. All we need is to wait for confirmation, let that 421 level fail, and we can start shorting it, because if this truly top, we're going to get a big leg to the downside. Think about it, okay? But as long as 421 holds, I'm going to give bulls the benefit of the doubt on any pullback. If that level holds, that's healthy pullback. Okay, so right now, SPY's at 427.7. All right, we go back to my 15-minute chart. All right, so we see here, I have a level at 428.5, and the market recognizes that. Okay, you can't say it doesn't. If that is cleared tomorrow or above 428.5, that puts the 429.5 to 430 zone in play. That's a very critical level. Okay, because if you look here on the daily chart, I'll make this line thicker. You can see here back in April 28th and May 4th. All right, around 429.6, that was a critical level, but I'm giving it a zone. All right, so we need to clear 429.5 to 430 to trigger more upside and possibly test that 200-day moving average, which is very important, and possibly a test this multi-month trend line that I got from all-time highs connected to March 29th. Okay, obviously if we break that, 435 is in play, which is my 61.8 retracement level. Okay, that's the bullish scenario. We need to see SPY clear some resistant levels. Okay, so below 427 is bearish. That puts 425 in play. 425 fails, I will favor a back test of the 50% retracement level at 421. Okay, bulls need to hold 427 and clear 428.5 tomorrow and go test those upper targets. Okay, so that's the setup, the bulls case scenario in the bears case scenario. Now the second thing I want to talk to you guys about, okay, the signs that the market is in. All right. So last time I talked to you guys about signs if the market is in. I said to you guys the first sign is if SPY can clear the 23.6 retracement level of the Fibonacci level. Okay. So if we go to the daily chart, okay, you can see that SPY did clear the 50% retracement level right here. Okay. And that level was at 390, 23.6 retracement level, 390. We cleared it back in July 19, back tested at support July 26, and popped about $40 since then, okay? So the next sign that we need to see based on history, okay, is the SPY clearing the 200-day moving average. You can see here, this was the 2000 bear market. SPY spent a lot of time rejecting and below the 200-day moving average. But when it finally ended, one of that sign was clearing the 200-day moving average, okay? We can go to 2008 bear market. You can see that it cleared the 23.6 retracement level as well. But it cleared the 200-day moving average. This pink line is my 200-day moving average, okay? So let's go to the current one. The 200-day moving average is currently at 431.2. I don't think the bottom is in yet unless that can be cleared. Okay, we cleared it earlier this year, way back in March, but had a false breakdown scenario. You see a breakdown over here, false breakout, back tested it as a resistant and pushed all the way down. So the 200-day moving average is extremely significant. All right, the bottom is not in unless we clear the 200-day moving average. All right, and it's very close to my multi-month trend line right here. All right, so 431.2, 200-day moving average, and also multi-month trend line, which is now at 432.6. We need to clear those levels for a sign that the bottom is in. Until that happens, the bottom is not in. So I will be shorting big time if SPY can eventually take out this 421 level. Okay, guys, that's just my thesis. I'm going to move on to Triple Q. Triple Q, still chopping, you know, similar to yesterday, all right? It did not. I had a support around 326.5 with a resistance at 329.7. A lot of noise. But one thing I want you guys to notice, this red line is the 5-day moving average. You can see in the past here, strong up moves, the price spends a lot of time above the 5-day moving average, and you can see Triple Q is still below the 5-day moving average. So not a good sign for bulls. 329.7 must recapture tomorrow, and the 5-day moving average is at 330.7. Needs to get above those levels and trigger more upside. All right, 331.4, 333.5, and then I got a level around 334.5 as well. All right, support right now is at 326.5. If that fails, that should trigger some more downside. 325 and 322.3ish will be my first two targets. Okay, and here is Tesla. I'm looking at a 1-hour chart of Tesla. You can see we got a cup, we got a handle. Tesla is still around the handle phase. Okay, still in the handle. That does not guarantee that Tesla is gonna go up. I have a critical support here around 308ish. If we go to the daily chart, 308 is the 200-day moving average. Excuse me, 905 actually. Well, that was totally wrong. So I'm gonna move that down to 905ish. All right, go back to my 1-hour chart. So I got a level. Sorry about that. I got a level at 905ish that represents the 200-day moving average on the daily chart. If that level is lost, we could see a big move to the downside. I will have a target at 887, but there is some support around 895 and 900. Okay, so bearish below 905 tomorrow. All right, targeting 887 is my ultimate target with 900 and 895 en route. Okay, I would be bullish on Tesla if it can clear 916. That would be a breakout of this handle based on the cup and handle. All right, guys. So that's what I have for you guys today. Thank you guys so much for watching. Peace and love.